Hi, welcome to the video, and today we are going to go over this Barron's article, how you should buy Tesla because it could be the next Apple. Tesla picked up another buy rating on Monday from an analyst who sees Apple-like potential in the electric vehicle pioneer. Recently, we've seen an influx of price upgrades after paradigm changer with their record delivery numbers, delivering over 180,000 cars, well over the initial estimates of 160 or 170,000 in a quarter that is notoriously bad for delivering cars. Today's analyst who finally saw the light was Jonathan Dorsheimer, and here we can see his analyst profile on tip ranks. This ranks how well their return is out of 7,000 other analysts, and you can see he is a very good analyst. 5 stars, ranked 219 out of 7,431 with an average rate of return of 34.9%. And here we can see his price target of $1,071, a 52.57% upside of where it's at right now, roughly around $7. Now, when we're talking about price targets given out by Wall Street, it's generally 1 year from now. So 1 year from now, he believes that Tesla should be around this price per stock. But like I said, he's not alone. Recently, Adam Jonas has also talked about Tesla, and it says reiterated, but that still is more forceful than maintained. He was just recently on TV talking about how he would recommend all of his own clients to have to own Tesla because Tesla will be the company that potentially could make all of your other investments obsolete, especially if you are invested in legacy automobile companies. His price target is $880, a 25.36% upside. He's also ranked fairly highly on tip ranks with an average return of 13.4%. Here we have another Tesla bull I want to talk about. Daniel Ives has always been a Tesla bull, but recently he also has reiterated that Tesla is a must own. We can see he's ranked very highly, the highest out of all the other analysts we've seen before, number 81 out of 7,431 with an average return of 32.7%, an astounding performance. His Tesla price target is $1,000, a 42.45% upside, but I don't want to be this one-sided. Let's also take a look at some bears. This is my favorite bear. His name is Gordon Johnson, and look, he's so special because he has 5 white stars. So that must, oh, I'm sorry, he has no stars. He's ranked close to last with an average rate of return of negative 0.72%. This is a tough call. Would I want to listen to Gordon Johnson or Daniel Ives? Because honestly, I think if you make too much money, that's also a problem. So if you have that issue of having too much money, I would definitely listen to Gordon Johnson. I did some Googling, and the last major news article downgrade was from January 5th, where an analyst called Stuart Pearson was more bearish on it. And here we can see Stuart Pearson, also 4 white stars, right? Depends on how you look at it, or 1 yellow star, negative 3.1% return. But I want to be fair. Not everybody with the worst analyst rankings on TipRank have a bearish view on Tesla. This is an article from December 11th, 2020, and again, I have to dig into the past because recently the bears have gone very quiet. Jefferies analyst Felipe Hochois, I'm sorry Felipe for butchering your name, he downgraded the stock to hold from buy while raising his price target to 650 from 500. Even though he is relatively bearish, he still has a price target of $650, and we can go here, his maintained, and actually it's higher than when this article is written. So he still thinks that Tesla at $700 is fair. There's like a slight downside, but this is the most reputable bear I could find. So this should tell you things are really changing. Not everybody I just pointed out was a bull a year ago. I would say a majority of people were actually bears or neutral. This is because Tesla is actually proving themselves with actual delivery numbers. I believe the best is yet to come, but let's dive a little bit more into this article and see why Dorsheimer now believes Tesla deserves a $1,000 share price. Dorsheimer's case is built around all of the different businesses Tesla is now involved in. He believes the automaker is similar to a platform company like Apple. Apple sells hardware such as phones and computers. It also offers music, entertainment, cloud, and other services on a subscription basis. Tesla, for its part, sells more expensive hardware, namely vehicles, and sells solar roofs and battery storage. It sells software and services such as self-driving upgrades for its vehicles and electricity via its nationwide charging networks too. People that have been doubting Tesla keep saying that for a vehicle company, its evaluation is way too high. How could it possibly be worth more than all of the legacy manufacturers combined? And this is the reason. It's because it is not an automobile company exclusively. It is more similar to Apple because not only is it selling what we say are cars, but I actually believe are robots, it also sells software, and not just related to that of the automobile company. It also has a solar company putting on solar roofs. It also sells batteries, battery storage in your house, battery storage for other car manufacturers. It touches upon so many more verticals that other legacy manufacturers just don't have access to. They aren't in it at all, and they definitely are not software companies like Tesla is. Eventually, someday, I don't know in what timeline, when a Tesla becomes full self-driving, the types of apps and software and games you can play within the car, it's only going to expand, and they are going to have an Apple-like library of different apps you will be able to use in their cars, and they are building up that library now. And the beauty of software as a service is this is something that you can make profit off of with very little capital, because you just need a large upfront investment to develop the game, to develop the software, and eventually when you're selling the software, the cost of creating that is very, very low. It's essentially zero. So this is why Tesla is also valued as highly as it is, because selling software is very, very profitable. Back to the article, many analysts have focused on the potential of Tesla's self-driving software and its future robotaxi service. Dorsheimer, however, believes energy storage is a large opportunity as well. He projects $8 billion in energy storage sales by 2025. This is also something Chamath Palihapitiya has also talked about. Tesla batteries have the potential to allow you to become off-grid, meaning you do not have to be connected to your local or state-wide energy grid, because you could be generating your own electricity from solar panels, and it stores into batteries, Tesla batteries that you put into your house, and that could be enough for you to be sustainable by yourself, because if you have enough batteries, it could be able to power your house for days or weeks or eventually months if you want to purchase a lot of them. After Dorsheimer's upgrade, about 43% of analysts who cover Tesla stock rate shares a buy. The average buy rating ratio for stocks in the Dow is about 60%, so it's still lower than the Dow, but 43% is very, very high for Tesla shares. The buy rating ratio, and this is key for Tesla, was roughly 20% 1 year ago. So the amount of people that are willing to buy or think Tesla is a buy is more than double than it was 1 year ago. Tesla always, for one reason or another, has had a lot of bears. A lot of people have always been trying to take it down. I suspect it's because it was going to be, and now inevitably, be so disruptive to the old guard that there were a lot of forces that felt compelled to take it down on behalf of certain companies, but also because this change, it's not intuitive to everybody, and it can be very, very scary. Just looking through comments, you can see how many people their gut feeling is to be very, very distrustful of these large companies, of having cars with no humans driving them. It's a scary thought, and I think people are pushing back against it because it's the unknown. Fortunately, that has never stopped humans from advancing. I believe that this is a future. Though the pace of adoption will depend on how us as a society acclimate to this, how we accept this, and also how our local governments and national governments decide to roll it out, and what type of regulations they will need to adhere by. Back to the article, at $1,000 price target, this values Tesla at roughly $1.2 trillion based on shares outstanding. Tesla stock has stalled out in recent weeks. Shares are down down about 4% year to date after an epic 743% rise in 2020. Analysts and investors will be looking toward first quarter earnings due out April 26th to get a sense where the stock will head for the remainder of 2021. For the first quarter, analysts project 76 cents in per share earnings. Tesla earned 80 cents a share in the fourth quarter. Fourth quarter was a record year for them. The fourth quarter number was short of analyst projections, but Tesla delivered more vehicles in the first quarter of 2021 than it did in the final quarter of 2020, making the first quarter earnings estimate look reasonable. I am not a clairvoyant. I can't predict how well their first quarter earnings will do exactly, but I do predict that it will surprise you, it will be strong, and more bears are going to go missing. Tesla has been investing so heavily in itself, so heavily in the future, while legacy manufacturers just continued to drag the ball and only making money the way they've always known how. In this article, we're reminded that Tesla is not even just competing with these legacy manufacturers. I believe this is already a done deal. Most legacy manufacturers are going to be in a lot of trouble unless they partner up with Tesla. Tesla is going after everything. Self-driving cars, software, solar, energy, battery, they will be all encompassing. And I'm not saying that they won't have hiccups. I'm not saying they won't have issues, but their ambition and the rate they are advancing means they will be a very, very formidable force. And they will most likely be the number one largest company within 10 years. And that's my prediction. I'm putting it out there. So if I'm wrong, you can hold me accountable. But that's just what I think based on what I'm seeing. I don't see anybody else that's doing this much to change the world that would belong in that position, at least within 10 years. Anyways, that's it. That's all I have for today. What's your Tesla price target? Let me know in the comment section below. This is Green Knight Trading, where Squires become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.